So tonight we're going to be talking about strategy, and the text is a little misleading. I said turn 2,500 to 147,000. I'm sorry, it was turned 2,000 into 147,000. Okay, so first I want to do a quick little disclaimer, guys. This is a back-tested system that has worked. I have made money on it, and I have done a lot of good work with this system. This is my newest trading setup to my tool belt. So when I'm showing you guys this, I have not tested this in multiple markets. I have not tested this in a COVID market. I have not tested this in a bear market. I would say we are somewhere in the middle right now with an average market. I just wanted to give a disclaimer that, hey, this system has not been, I've not tested it for 5-6 years in advance. In fact, I'm still optimizing it to this day, but I still think of all of my setups, it is the easiest and most mechanical to learn. My other setups are more complex. While yes, they make a lot of money and they might have a higher win percentage, they are very complex when it comes to starting. You guys go to bed?
Is there any way you can hold the mic up or
I can't. Could you have AJ?
That's fine.
All right.
Just
Thank you.
Here, go say goodnight.
Good night. Today's doing a webinar. All right. Good night. All right. That's thing number one. So again, back to what I was saying. I want to make sure to tell you guys that this system has not been tested in a COVID market. I tried to run through some simulations to optimize it, but it is the most mechanical system. So I think for beginners, this is a great one. All right, cool. Now, first thing I want to talk about is numbers. Guys, there's 3 KPIs we look for when it comes to creating the perfect trading system. What are they? There's 3 numbers. There's a guy named Will that got it last year, and I was super impressed. Let's see if someone gets all 3 this time around. What do we got? 3 numbers, 3 KPIs, or key performing indicators that make a trading system profitable. What do you think they are? See what we can do. What do you think? I can give you guys one. Cash flow, no. So I'm thinking, like, if you log into okay, boom. Someone got one off rep. Risk to reward ratio. R to R. That's one of the numbers. What are the other KPIs we need to look for? Danny's got 2. Win percentage. Hey, Donnie. There we go. There we go, Donnie. Donnie got drawdown. Jeepers. Maybe you guys know more than I expect, but most people don't get drawdown. Guys, we get some dub in the chat for Donnie. Everyone needs to throw a dub in the chat for Donnie. I better see 30 W's because that's impressive. Drawdown, win to loss ratio, and win percentage. Okay? Excellent job, Donnie. Good stuff. Good stuff. So, number 1, let's talk about win percentage. Win percentage is great, but it's not too impressive on its own. I'm gonna be vulnerable here for a second. While I might not flex Lamborghinis and flex this crazy Donnie Dubs lifestyle, I have in the past, guilty as charged, I have mentioned a trading strategy that I had an over 85% win rate. And looking back at it, that doesn't mean anything. Like, cool. You can have an 85%, you can have a 99% win rate strategy and still lose money. So in and of itself, not that important. It just sounds cool, and it's good for marketing. I'm gonna be honest. So the second one is risk to reward ratio, like we talked about, and then third is drawdown, and we're gonna go into all of them real quick. Now here is a long. This is data from one of my long accounts. So I test my long strategies and my short strategies separately. A lot of you guys who might know me, I started as a long trader and then transitioned to more short. My win percentage was a 36.84%. Now what this means is you be like, yo Jay, you may tell me, this little quarter I have in my hands. You guys can't, watching the recording can't see it, but if you guys are in the live stream, you can see it. This quarter, you may tell me if I did one of these numbers was more accurate than yes. Yes, I am 100% telling you that a quarter was more accurate. But here's why I was profitable. This system was actually quite profitable because my win-to-loss ratio was fantastic. My average winner was around $2,000. My average loser was around $800. So you can see that win percentage is a little flawed. Let's look at another example. Did I just duplicate my slides? Yo, what? How many slides do I almost have 3 of the same slide. Let's talk about venture capitalism. Venture capitalism sometimes can be the biggest. Anyone watch Shark Tank? I just watched it last night. I just turned it on for the first time in a little while because I got some new sharks. And my construction company just built a Raising Cane's, and the CEO of Raising Cane's is a shark now. So I wanted to see what he was into. Anyone know? Anyone watch Shark Tank? Yay, nay? Okay, not many people watch Shark Tank, but Shark Tank is basically a bunch of venture capitalists that are looking to invest into companies. Now, they did a study that the average venture capitalist has a 2% win rate. A 2% win rate. That is terrible. You mean to tell me that only 2 out of 100 investments you might do actually really pay off? But because their win-to-loss ratio was so high, when they would lose, they lose, say, $500,000, but when they won, they would make $100+ million, their strategy was profitable. So with a 2% win rate, you can be profitable? In theory, yeah. Okay, now let's look at a not-so-good one. This was a strategy I was back testing on a short side, and I had a 74% win rate in this. And this was through 200 trades. 200 trades, I had a 75% win rate, and I barely made money. You can see that after all those trades, after commissions, I was probably close to break even because my win-to-loss ratio sucked. Okay, so you need these numbers to be in conjunction with each other to have a proper strategy. Now, the last one is you need drawdown. Drawdown is super important because if your strategy incurs a lot of risk, which we're going to talk about later, but has can have immense drawdown out the gates, guys, you can have a proven profitable system, a proven profitable strategy, and you can lose 100% of your account off rip before making any money. Like, what? How does that even make sense? Well, you can blow your account due to drawdown if you have too much risk before making a ton of money. So drawdown is super, super important. Well, this strategy boasted around a 22% drawdown. My target max is around 25%. If I exceed 25%, I know I'm risking too much. Now, that doesn't count into market fluctuations, but on an average market, if my drawdown is over 25%, I am risking too much. Way too much. A lot of you guys are like, geez, I'm in like a 99% drawdown. Any crypto traders in the chat? McDonald's is hiring. I'm just kidding. Point is, yes, you can. I'm going to show you a strategy that I was working with where I was killing it out of the gates. But because my risk was not in check and I risked too much per strategy, a couple losses came in. I blew the account, and then lo and behold, if I kept trading, I could have made money, but I blew the account first. So the risk was really, really not in check. And what I will say to this is your first few wins in your account are the most important trades. Because if you start with 10,000 and you got your account down to 5,000 because you incurred a lot of risk, that's going to be twice as hard to get back to where you should be. So having a low drawdown is ideal. And I can teach you guys how to have a lower drawdown. Okay? Look at this. Yikes. Yikers. This system was very profitable until it wasn't. This system did not do well with new market fluctuations. And because of that, and because of the risk I was incurring, when the market changed, well, my profitability curve also changed. So I was making money, making tons of money. I'm like, oh, hells yeah. This should have been an early indicator, but I was pig-headed and didn't realize. And then 5-wave structure and then drop. Yikes. Okay, so let's talk about how to optimize these numbers. Now, when I say about which numbers are best, well, it's really up to you. You can be a trader that can incur a lot of drawdown. You can be a trader that doesn't like drawdown at all, and you want a consistent profitable curve like this. I will tell you, the more consistent your profitability is, the less exponential gains you will see. Because I'll see, I'm going to highlight a trader. I'm not going to say his name, but he's very popular on Twitter. But he made about $15 million in 20... I'm not going to tell you the year. I might give it away. But he made like 15 mil. And this was about, quite a while ago. It was before COVID. And then to this day, his year-to-date equity curve, and guys, he's made more money than me. He's 8-figure trader. I'm not, but still, he has not adjusted to market conditions, and because of that, his equity curve went yoop, and then slowly down. He's down to like $10 million in realized gain. So, and that's in the last 5 years. So basically, he made $12.5 million in 2 years, and then in the last 5 years, he's lost $5 million. So he's still up all time, but I mean, you gotta adjust, man. You gotta adjust, and he didn't. But for you, I look like the Hulk here. I don't know what happened with my neck, like a bite was taken out. But it depends who you are as a trader. I'm someone who doesn't mind a little drawdown because I've traded enough accounts. I know the system well. I stick to it. But I'm going to show you the differences. Now, here is the exact. I didn't tell you this. This is the exact same strategy. The exact same. And you're like, what? No way. Well, one of them, I incurred an accumulative risk. There is a fixed risk and a cumulative risk. And we're going to talk about them both. A cumulative risk means as your account grows, you are risking more. So if I have a $10,000 account, I'm risking 3% of my account, I'm risking $300. Now my account's at $100,000, I'm risking $3,000. One of these, I did a 7% risk, and one of these I did a 3% risk. And you might be thinking like, dude, it's like 4% difference, not that much. I was just on a call with one of my mentors, and he said, I risk not on his account, but per trade 9% of what he's willing to put in, and another trader risks 12%, and it's only 3% difference, but it's a 33% increase in risk. So they both make money, but one's drawdown is severely bigger than the other. In this case, 7% is on the left, 3% is on the right. So you could have a proven profitable strategy. You can have a proven profitable strategy, but because you're incurring too much risk per trade, you're losing money. Or you'll make a lot and then lose a lot. How many of you guys have been on like a trading spree and made a bunch of money and then like it just a month later is gone? And you're like, how does that make sense? Did I just get lucky? Is there some luck, or is there a guy on the other end of the screen that doesn't want to see me succeed? Well, the difference is you're probably incurring way too much risk per trade. Okay? Me every other week. Yeah, we're gonna fix that, bud. So this means that you have to have a super fixed risk or a ironclad strategy when it comes to risk. I will always say, before I teach you any strategy, we have to talk about risk. Risk is the most important thing when it comes to day trading. Always, if you guys have been in any of my live streams, you will know when I take a trade, I always assess the risk and then I build a trade plan beyond that. Risk is the most important. Okay, so redefining risk means, well, for some of you, having a risk management strategy. Some of you guys might not even have a risk. I might be like, so what's your risk? What's your strategy? And a lot of you guys be like, well, red defined. I just see that. Nice. Need to have a E in there. I told you I'm good at math. I'm not good at English. Okay. But the point is, a lot of you guys don't even have a risk management strategy. Some of you guys are like, well, I don't know. I just stopped out. Whatever. Guys, pay attention to risk. Well, I'm going to give you, I think next slide we talk about it. But what I do is I like to be more mechanical in my trading. Some of you guys are not mechanical at all, which, yeah, some of you guys say, well, I just have an artsy flow of trading. I've gotten that before. Like, all right, dude, cool. Keep going with your art. I'm sure it looks beautiful on the year-to-date curve. But you need to have a ironclad mechanical system where you are defining entry points, you're defining exit points, you're defining your risk, and you have back-tested results on your strategy. I'm going to show you guys all this tonight, but if you guys don't have this, I am going to I'm gonna give you an example. Now, a lot of you guys might, like Timothy just said, struggle with the discipline. But if you have a mechanical-based system and you know, guys, I know exactly how much I should make given a strategy. I just did a one-on-one today. I was talking to him. I'm like, dude, this is how much I make year over year. You should be making with this one strategy, if you just trade the strategy, a minimum 200 to 300% a year. 200 to 300%. On a very low year and a bad year with commissions and everything, you could be looking at 100%. But this strategy should be doing anywhere from 100 to 300% no matter the market conditions. Period. And if you just stick to that system and trade to win the year, you will make money. And I find having more mechanics in your trading, you will be more disciplined. I think a lot of people become undisciplined because they just don't even have a plan to begin with. Well, it's easy to be undisciplined when you don't have a plan. That's like going to the gym and not having a workout plan, right? You just go to the gym, show up, and you're just, maybe like treadmill, maybe rip a couple curls. The chicks like the flat bench, so, let me let some bench. Well, if you want to be optimized, you should go in there. This is how many reps I need to do. This is how many sets I need to do. This is how many workouts I need to do. This day is this day. This day is that day. And this is exactly the system I'm going to use. So at the end of the year, with my diet, with my workout plan, I should be here. Okay? Everything with a defined plan is predictable. If you don't know how much you should be making by the end of the year, percent gain wise, then you don't have enough predictability in your trading. And I would, as a funder, because I fund other traders, not prop firm, like real money in my fund, like they're trading with live capital. If I don't know exactly how much they should be making at the end of every year, I'm not going to put money towards their strategy. I just won't. Okay. Now I should be charging this info, but I'm not. There's a few things that I'm going to be talking about. I thought I talked about. I must be missing a slide here. Well, I'm missing a slide, but I'm going to talk about it. So remember how I mentioned, I'm going to go back here, how I mentioned a cumulative risk and fixed risk? You guys can decide the two, and I'm going to tell you the pros and hold on. A little sneak peek action here. Something must have happened with someone must have sabotaged my slideshow. I'm missing a couple slides. It's annoying. Well, anyway, there's two types of risk you can have. You can have fixed and you can have cumulative. Now, I'm going to tell you the pros and cons of both. What? This is weird. I don't know where they went. But, because I have examples of both. With a fixed risk, you are going to incur less drawdown. Okay? So, fixed risk means you have $10,000 in your account. You risk $200 per trade, and as your account grows, even at $100,000, you risk $200 per trade. Now, the benefit of this is your drawdown really shouldn't exceed more than 10%. So your equity curve is gonna be like this. So if your guys like, I need consistency, I need bills paid, I don't really care if it's 100% or 300%. I just want consistency in my account, and I don't want to incur much loss. Well, you might be someone that might want to do fixed risk, where you are defining the dollar amount you are risking. Now, with my students who have small accounts, and when I do my small account challenges, I always do cumulative risk. Because when I talk about accumulation of risk, I am increasing my size as my account grows. Therefore, I'm increasing my max loss. So, fixed risk, I'm risking $200 no matter what. Cumulative risk is I'm risking 3% of my account no matter what. I would not exceed 3%. I would not exceed 3%. Anything beyond that, I have found you get this. Very rare strategies can you do 5. I would say 3%. If you're risking more than 3% of your entire account per trade, odds are you are going out of bounds with your risk, and odds are your account will end up at 0. Like I said, if you are risking, this is 7%. You can get lucky off the gates, your strategy can be profitable, and then crashes. So a lot of you guys would be like, dude, that looks like my equity curve. Well, maybe stick to a defined risk plan. Might help you. So we're going to talk about a little strategy tonight. And this is a short strategy. This is the entry and exit conditions. Okay, and I'm going to go over them all. But like I said, this is my newest one. And I am still adjusting some fine points as I go. But the first thing is I short. This is a short. Second thing is this is what the filters need to be for the stock, or the criteria I need to find the proper basket of stocks to be able to trade on, knowing my performance. So I need the stock to be up at least 70%. We talked about that in day 1 or 2. I need the volume, meaning I need a lot of eyes to be looking at it. If not enough eyes are looking at it, then I don't really care. There's a lot of stocks that just like it's got no volume. I'm not interested in it. I want eyes in the prize. Like I said, the herd mentality the last few days. If just a couple people walk out of the store screaming, I'd be like, hey, some weirdos. But if I see 100 people run out of the store screaming, well, then there's some predictability there. Something's really going wrong. So in this case, I need the stock to also be above 50 cents. I don't like shorting anything below $1 usually, but at minimum 50 cents. Because I'm on a commission-based broker, I pay commissions, and I don't want to be, I call them commission monsters. When, at the end of the day, I'll make $3,000 and my commissions will be like $1,000. It's like the risk, I'm now incurring more risk. Okay. Now, this is based off the 5-minute time frame, and you can see my cumulative risk is 5%. Now, my entry conditions is I need the 5-minute candle to close below the previous bar's low. And I'm going to show you examples so don't get confused. And I need the time of day to be at least 10:55 a.m. EST or before. What I'm saying here is I need the stock to pump before 11 a.m. and then I need it to start dumping before 11 a.m. That redefines how many stocks we can trade. The reason for this is I have I can show the statistics afterwards, but I ran a simulation of all the stocks that held their move past noon. And I believe 87 or 83% of them continued higher, or at least made a new high before dumping. What this means is if the stock is still moving before 11 a.m. and is still holding its move, then more than likely it's going to keep ripping. So I need this to happen early on. The reason for this and the psychology behind this is, how many of you guys sit down at your desk and by like 10 o'clock a.m. or 30 minutes to an hour to open, you're bored, you're done. You've all the momentum's gone, everyone's going out, they're quitting for the day, it's quitting time. When I was doing it at the time of the New York Stock Exchange, I mean, it would be rush, and then within 30 minutes to a half hour, just quiet. You can hear a pin drop. And that was common for New York Stock Exchange. That's common for every trader. So the point is, I want everyone to be leaving and forgetting about the stock so I can make money on it. A lot of you guys might... If the stock is still running past this time, it means there's too much attention on it, and odds are it's going to continue to run. Like CRVO, if anyone traded that today, CRVO. Okay, and my stop loss is 3% below high of day, and we're gonna look at some examples. So VLCN is a prime example. Now the reason why I said I want you guys to, I'm optimizing it. One optimization I'm having is you can see that my entry condition was based off of the previous bar. So we had a 5-minute candle close below the previous 5-minute candle's low. Therefore, I went short. Now, what I've been doing is I've actually been waiting once I get that signal for a move to the upside. Once I get a little pop to the upside, I start adding. The reason for this is I'm closer to my risk, therefore I can take more size. I'll say that one more time. I am missing a lot of my slideshow. I just missed. I'm gonna have to find that slideshow, guys. There's too many key points I need to add in the slideshow. But a simple rule of thumb is the closer to your risk, the more size you can take. What this means is, remember we're talking about the 3% scenario. I'm gonna have to get my sketch tool out here. This is insane. I don't know who sabotaged my slide, but I will find them and I will fire them. You guys can see. No, you can't. Entire screen. Here we go. Sketchpad. So as the old saying goes, say the stock rips and then consolidates. And let's say I define my risk right here. Remember, I can risk 3% of my entire account. So if 3% and I enter right here, well, 3% is right here. I can risk a lot more where in comparison to if it, say it fades a little bit, and then I short right here, well, now 3% has to be this. So now I'm risking still 3%, but I can only take a third of the average position size. What I'm saying is the closer to where I'm expected to risk, the more size I can take. I learned this from one of my head traders, Pete, and he taught me this, and it's made me so much more money. So I like to wait for the stock to make my entry signal to drop, and then have a little curl to the upside so I can start adding. Reason being, I'm closer to my risk, more size I can take. I can take sometimes double the size, which means double the winners. And I'm risking the same amount. Pretty cool. I gotta find that slide. There's just too much information I'm missing. Here's an example. I went short. I should have waited for that pop. But you can see after 10:30 a.m. EST, what happened. Now also, what do we have here? 1, 2, 3, 4, 5. Ooh. Well, 5-wave structure action. Who remembers that from last night, right? Clean 5 waves. Clean, clean, clean. So when I got a candle bar closed below the previous bar, and it was before 10:30 a.m. EST, I was able to go short. Let's look one more. JTAI. I went short, yikers, right here, where my cursor is, because this candle closed below the previous bar high. Closed right there. It was within a penny difference. Now, in this case, if I waited for a pop, I would have had a worse average. I was able to short right here, and as it faded down, I was able to make profit. Another example, KWE. This stock right here, this it's a little squeezed here. This 5-minute candle closed below the previous bar low, and I was able to make money on the downside. I'm going to show you a lot more trades. Don't worry. This candle closed below the previous bar low, not its body or its open, the low. I was able to short. I could have waited for a pop to add or waited for a pop to add, but at the end of the day, it faded and I made money. Here's one where I lost on. Okay. I shorted where it made a previous bar low, and then it curled, and my risk was this red line, 3% below high of day. The reason why I don't have my stop loss right at the highest point of the day is because everyone has their stop loss there. Everyone and their mother. Okay? So if my stop loss is also there, when that stock hits, 100 people's stop losses are going to get filled, and I'm going to get filled at a way worse rate. I would have gotten filled way up here. So I would have incurred a lot more risk. So I like to stop out before most people do. Therefore, I put my stop loss 3% below high of day. Here's another one. This one was tricky. Shorted it because it made it closed lower. Could have waited for a pop. I didn't. I closed as it was 3% below high of day, and then I re-added. You're allowed in this strategy, you can re-add twice. After the second time, I'll walk away. Mechanical system. 2 entries. After the second time, I'll walk away. And this one I more or less broke even on. Okay. Now, in the last 14 months, out of 409 trades, you'll see around a 62% win rate, with your winners being a tad bigger than your losers. Your winners and your losers are going to be relatively the same after commissions, but this is factoring commissions, by the way. But because you are winning about 2 times more than you're losing, you should be able to make money. Okay. This is the winning days because it allows re-entries. So 70% of your days should be green, 30% should be losses. Again, there's no strategy out here where losses aren't a thing. And then look at this. 14 months of straight green, baby. 14 months of straight green. And as you can see, it's a cumulative. So I'm risking 3% of my account here. Risking 3% of my account here. Now 3% of my account's a little bit bigger. I can size up. And then as you can see, it snowballs. Snowball, snowball, snowball. Okay. So before we continue on, I really do want to find a second, just real quick, to see if I can hunt down these slides, because there's a lot of information that I feel the need. I can't let you guys go with what I just told you and call it a day. Someone's getting fired tonight. Someone's getting fired tonight, baby. Okay, yeah, here we go. That was easy to find. Now I'm curious if I lost. Yeah, I lost a few slides here. So real quick, a quick tip I had when we talked about defining risk is one thing I like to have a notepad next to my desk. Therefore, I'm literally writing out my plan. Now, I have Excel spreadsheets that do it for me, and I have a huge database that can really help out a lot of traders. But by actually planning and writing down, there's a neurological connection between your hand, the pencil, and your brain. When you write down something, you're more often to stick to it. So get a notepad next to your desk or Excel spreadsheet or anything and plan the trade before. I mean, I spreadsheets make it a lot easier and a lot faster for me. I just plug in my risk and it literally populates everything else. But guys, please write it down. Don't just willy-nilly, maybe I'll risk $2. Plan it out. I'm begging you. This will allow you guys to be a lot more disciplined in your trading. It's simple fixes, really. And then, little J Money in the chat. So if you guys are part of Mastermind program, you'll know when there's an advanced concept, J Money pops out. So I got the J Money shades, and we're going to be talking about the advanced concept of, like I said, the closer to your risk, the more size you can take. But before I get into that, let's talk about the two types of risk. I talked about cumulative and fixed. The pros of a cumulative, I brushed on it, but I want to go over it again, of having a cumulative risk is you will have a larger percent gain over a 12-month span. But the problem is it's only so scalable. You will get to a point where you'll be taking so much position size and risking so much, it will then become not as profitable. Because there's something called liquidity in the market to where I cannot use everyone says, Jay, why don't you just put in $1 million if you know you're going to make money? Well, listen, the more money and the more position size I take, the less profit there is. Because there's only so many shares in the market to get filled at. So the more size I take, the less I'll get filled. The little fractions of pennies I'll make less. And then eventually fractions of pennies become 10 cents a share. And it really eats at my gains. So there's a really, really fixed amount of money you can get to. And the most I've ever had in my trading account where I felt like this is too much was $300,000. That was during COVID. Now, I'd probably say $150,000. If you have anything more in your account and you're trading these, there's really no need with leverage. Pete, our head trader who made $500,000 last year, literally has $50K in his account max at all times. Okay, so with cumulative risk, you will tap out at one point. You will have higher drawdown, which means it's going to be harder on the mental. You're going to lose a lot more money in certain instances. At the end of the year, you can make a lot more, but your drawdowns are going to be more severe, so you have to have a stronger mental to have cumulative risk. Fixed risk, the pros are, this is what more professionals do because of the liquidity cap, and it is more consistent income. Your equity curve, look at the differences. More of a slow and steady wins the race. Look at your max drawdown, 9%. Less than half of what a cumulative risk would be. Okay. The cons is the percent gain isn't as sexy. You're only looking at a 300% gain as opposed to a 7,000% gain. But in this way, it can be a little bit harder to grow small accounts. So if you guys are doing small accounts, I like a cumulative risk. I tell my students, go for that. If you're someone that's got like 50K and you're kind of secure in your life, I'd recommend a fixed. Okay. Trade the wind a year. I have this thing outside of my office when I walk in. And I just told some of the guys early on, I went and looked at a new trading headquarters where hopefully I'm going to see some of you guys. You're going to trade alongside me. We're going to do some sweet one-on-one lessons, some group lessons. I'm opening that up the first week of May. So if you guys are interested, come up to New York. But I walk by this before I walk in my office every day, and I realized something. I have to trade to win the year. Now, I'd write down my P&Ls, and this was funny. When I took the screenshot, I was actually in drawdown. You could see I had a nice green day, gave it all back. Nice green day, give it all back. Red. And so at this point, I'm like, this is why it's important to have a fixed system to know exactly how much you should make by the end of the year. Because even though I'm in drawdown, I've been in this scenario time in and time out. I know if I stick to my plan and stick to my guns, at the end of the year, this will correct. And I will be very happy with my year-to-date gain. Flash forward, I can go out there right now, and I ended this month fairly green. If you guys are in my premium group or my mastermind group, you know that these trading days were banger. I think I ended with like a 7-day green streak because I stuck to my plan. If I went AWOL right here, start freaking out because 1, 2, 3, 4, 5, 6, 4 out of 6 of the last days were red, yikes. Hard to zoom, but you can just see that these were red. I was red. I basically gave back. I was down 5K at one point in February. And I was getting chopped up, but I stuck to my plan and I made money. So trade to win the year. Everyone thinks they have to trade to win the day, and that's complete, utter bull. Fill in the blank. You guys, trade to win the year. If you don't feel like trading, if you have outside factors going on in your life, and you have, you didn't get good sleep, or you feel like boredom trading or whatever it may be, don't trade that day. There will always be a new opportunity, and the year is so much more important than the day. There's so many times where I just, like today, where I just walked away, I looked at the market, I said, there's nothing I like, and then I walked away. Now that was a mistake, I ended up trading at the gym, but the point is, be okay with not needing to take every single opportunity. I honestly think it's good and healthy for you to take time off, or to even just come at the market for a week, don't take a trade, and just watch. Just watch and observe. We are observers of the market. I heard one trader say, don't focus so much on the craft of making money. Focus on the perfection of your strategy and the perfection of your education. I just got off a 3-hour one-on-one before this. I am focused on the perfection of my education and the process. Mastering my mindset and my trading ability, not trying to trade to make the most amount of money. Period. Point blank period. I am confident I can turn anyone, even if you have terrible bad habits, I can take anyone into a profitable trader, but they need to focus on the systems before they focus on the money. Okay? Now, another advanced concept. This is Pete. I always love making fun of him because I'm like, yo, send me a professional picture for the website. And this dude was in the army, and after the army, he went right into day trading for 15 years. So he's more of a hermit. He doesn't have a ton of professional photos. He sends me this picture. I'm like, bro, how many olives do you need that drink? Like, do you want some drink with those olives? Like, holy shit! But I always love using this strategy or this thing. Because it's a testament of something that he taught me. And I have the video in a vlog. If you go look at our Inner Circle trip, my Inner Circle is basically professional traders. We all travel the world 2 or 3 times a year. We're renting out a castle on an island in July. We got a private chef. We're going to trade together, have a good time. And one of our Inner Circle trips, we were in Colorado Springs. And in the Airbnb we were trading, I was vlogging, and he said something that stuck to me. He said, the closer to my risk, the more size I could take. And I have said that over and over and over and over and over in my head 100 times by now, at least, because it makes so much sense. That system I talked to you about, so the dotted line is the entry, the red is your 3% risk, the blue is your reward. Now, notice how this stock moved up, and then it had a little pullback, and then you entered. Very close to your risk. Well, you're risking a very small amount to make a monstrous amount. Now, if you chase, you're risking the same 3%, but you have way less position sizing, therefore you can make way less money. There's times where I can literally risk to the penny. To the penny. I remember there was a stock where it was $3.10. There was a huge seller at $3.10. I put my order snug. $3.09. I was in. Imagine if you put 3% of your account risk on a 1 penny loss, how much size you can take. So if it moved up a penny, I lose. Yeah, I lose 3%. But I was so confident in the trade where if it pulled on back, I had a 100 to 1 risk to reward on that one. I was looking for $1 a share, and I got it. A 100 to 1 risk to reward, insane. Absolutely insane. But it can be done. Very rare, like twice or 3 times in my career. But the closer to your risk, the more size you can take. Therefore, you can have insane risk to reward. A 5 to 1, a 10 to 1 isn't uncommon for me. Isn't absolutely absurd. Okay? And then I just had to do this to mess with them. Basically, the closer to your risk, the more olives you can take. I mean, I had him in one of them, and he was like, that looks like a pretty damn good drink. I'm like, dude, get out of here, man. So, dude, I missed a lot of the slideshow. 3% of your account, if that's my entry point and my risk was high a day, that's what 3% of your account looks like. That's a big risk. Now, if you adjusted it a little bit and you took size closer, look how much more money you could have made. Okay? A lot more. And you could have risked a lot less. Now, actually, the calculator is a friendly reminder to actually do 3% of your account. Okay? Now, you guys, again, have access to the trading journal, and we're adding a risk calculator in there. It will be up in about a month's time, maybe less, probably 2 weeks, where you guys can put in desired entry, desired risk, and it can populate how much size you can take and your desired price points based off of your position sizing. So that is it, guys, for the 3-day mini mastermind. I really appreciate your time, but there's one quick thing that we got to go over. Now, I told you guys to give you guys a present at the end of every single one, and today is going to be no different. I have traded by myself for a while, but even when I first started, I wanted a team. I wanted a band of brothers, and I wanted accountability partners. I don't know if anyone in here was in it, but I make my mastermind students break off into small groups and have accountability partners because I think it's so important for guys to have guys that can text, "Hey man, what are you looking at? What's your setup? Did you define your risk? Did you do this? Did you do that?" Because there's times, and I have a trader. He just came to my house. He's downstairs right now, waiting for me to get done. And there was a time where he was too embarrassed to talk to me about a mistake he made. But because he had accountability partners who were in the learning stages that they were in, he was able to say, "Hey, this is what was going on. I need some help." And then even the students were like, "Hey, this is how you fix it. This is what Jason told us to do. This is what we're going to do." Because I understand that everyone wants to come to me and say, "Hey, I messed up. What you taught me." Guys, there's times where I mess up and I don't even want to tell everyone, but I have to because all my trades are public. So the point is, don't do it without a group. Hopefully you guys learned something in here, and if you guys learned something in here, just imagine what you guys can learn in our group. This was Mastermind or our ProfitCon in Nashville. We're doing another ProfitCon later this year in Miami, and I want to meet you guys. I want to be able to shake your hand. I want to hear, "Hey, this is how you've done. This is the progress you've taken. Because of this, you're now here." Noah was a student of mine at this point. Now he's one of our head traders. All of these guys I know by name. This guy, John, even lived with me for a little while. Killer trader now. He's able to watch. He's able to look over my shoulder for a little while. So if that's you guys, I would love to help you guys. I would love to book a one-on-one call for you guys to help create a custom trading game plan. And maybe, if you guys want, to further your education with Profit Chasers. If you don't want to, that is totally okay. I really hope you guys learned something from here, and I hope you guys got some value out of the 3 hours you spent with me. If you didn't, I really apologize for wasting your time. I tried my absolute hardest. I tried to give you as much as I possibly could. But if you guys are someone that wants to further your education, or you just want a one-on-one lesson so you can see what else we can do for you, I'd love to help you guys out. So I'm gonna drop my one-on-one calendar down here, and it's gonna be either with me or my head trader Jimmy. Sometimes I just don't have time with some of my other students, but Jimmy is one of my head traders, and he is a kick-ass dude. And if you have any questions, do not hesitate to reach out to me. Don't forget, you guys still get the free month for the journal, if that's something you guys want to do to track and annotate your trades to see how you're performing. Still giving you guys that. But if you guys want to further your education, if you guys want to learn from me, if you guys want to learn one-on-one, how we teach is we teach in small groups. We teach one-on-one. I took 100 members for this, but when I do my mastermind sessions, I take on 30 max because I want to make sure I have an intimate one-on-one relationship with all these guys, so I know their styles. Everyone is different. As an educator, it is important to know the students you are working with. Everyone is different. Everyone has different trigger points that set off their emotions, and I cannot do that with 1,000 people. I just can't. That's why I no longer do the big, course thing and all that stuff. I tried it 4 years ago. I hated every second of it. That's why I always laugh at other gurus and entrepreneurs, because you don't know your students. You don't know their performance. Quit acting like you do. I like to work with you guys. So if you guys want to do that, I would love to talk to you guys. I just put the link in there. You're going to talk with me or with Jimmy. And now I'm going to open it up for questions. What questions do we have? We can go over anything I tell you over the last 3 days, or we can talk about what our mastermind program looks like for you guys. What do you guys need? I'm here for your success. Thank you for taking time to do these. Tonight's lesson with 3% stop loss really did something for me tonight. I appreciate that. Absolutely. Even if it's one gold nugget you guys got out of here, it'll be hopefully it'll be worth it. Vin said, "Can you explain the difference between stocks and futures?" So futures is a hyper leveraged contract based trading. So you are buying for options. You are buying, I believe, one contract is equivalent to 100 shares. Correct me if I'm wrong if you're options traders, but it's a huge increase in leverage. So for me, I don't like to do it. The not that futures are bad, but just stocks and shares are simpler, are easier to read in my opinion. You can predict order flow better, and you can short a lot of these crappy companies. Futures, I like futures for when you're trying to short a commodity or generalized group like a natural gas, or if you think the market's going to correct. In our fund, we have a couple. Pete, I don't know if he covered them yet, but he had a couple ES shorts, so he was shorting the overall market to help balance our fund. But I would highly recommend not getting the futures until your second or third year into trading. There's levels to the game. There's enough percent gain and enough reward for us here with stocks where we don't need to go off into options or futures. But that's just my personal opinion. Obviously, I have a bias. Sweet, Alex. Alex, I know you trade quite a bit. Hopefully, you learned something. What do we got for questions, guys? I got, I'm done. I got all my meetings. Lots of value and for free. Retweet the top 3% here. Also love getting the strategy parameters jotted down as well. Thank you. Dex, I also got a question. Any reason for the max 10 million market cap? So good catch. That is something that I monkeyed with. The reason why I have 10 million is when I was doing my numbers, I did 10 million and did 100 million. Now, when we're talking about big position sizing, I want to have a larger market cap, therefore more liquidity for me to size into. Here's the thing. When I did my numbers, I only made a 30% increase in profit, not overall, but 30% total, which was basically, when you're talking about those numbers, it was slim. And I took 50 extra trades for the year, so 400 ended up being 450, and it really didn't do anything for my account. So when I really just simplified it to the smaller cap stocks, they are the ones that are going to pump and dump most likely. Because you have to understand, the reason why they are sub 10 million is because they suck as a company. So odds are when they pump, they are taking the opportunity to dilute their own stock because they're not going to miss the opportunity. They can't afford to miss the opportunity because if they do, then they're going to have to sell off way more of their company and they won't be able to make as much to keep going. So the pump and dump system that we're trying to catch really works well with stocks that are sub 10 million before trading, not after the move, before the initial move. So if they do a 300% jump and they're at 30 million, that's fine. They were 10 million prior. But they're still not going to miss the opportunity to dilute if they get it. Still going to sign up so much to learn. Awesome, bro. I'll be talking with you. Appointment booked. I have to get back to the meeting with a day job. Love the webinar. Look forward to progressing this group. Awesome, Glenn. I'm really excited to teach you guys. You were awesome. You showed up every day. You asked questions. You guys were great. I'm trust me. I take notes. There's about 5 or 6 of you guys that have been here every single day that are asking good questions. What went wrong in your worst trade that you referred to during lesson 1? Going off strategy, way too much risk, stop loss, freak news event. So what went wrong? Well, what didn't go wrong? I was on a new broker. To be totally transparent, this was after Trade Zero. I don't watch my tongue, but Trade Zero did a scammy move on me. That's all I'll say is they great guys. Dan Pipitone, the CEO, Randy Beller, all great guys. I have nothing bad to say about them, but people in their compliance team did a number on me. So I was at a point in a vulnerable stage in my career where I just got screwed over by the broker I used. And these guys, Success Trader, willingly let me in. And these guys had high value clients. Usually they don't let in someone who hasn't made a verified, 5 million or more. Minimum to put in an account, they made an exception for me, was 50K. Usually it's 100K. And it was like 2 or 3 days. And I really I wanted to impress them because I knew it was low man on the totem pole. I'm at dinner with guys that are really, really just sound traders that have been around for years that I'm sure if you asked me their name, they were at these dinners. and I felt like I needed to, get there. So I way oversized risk and pretty much blew the account. And I was so embarrassed, I never even messaged him back. It was embarrassing. But yeah, that's what we're wrong. Can you run through the normal morning, a day in the life, the first thing you look for when you get up? A stock up 100%. So first thing I do is I get up and I just check my gap scanner. But one thing I want to reiterate is it's really important for you guys to make sure your brain is at high functioning activity. Please do not roll out of bed at 9:29 or roll at your desk at 9:30 and think you're going to have the mental capability to analyze the market and to stick to your risk. I've been there, tried the whole partying life. That's why when I see guys at the clubs one night and then at the desk the next morning like hungover, I call bullshit on that. I'd be very careful on that lifestyle. So usually at least 1 or 2 hours before. And then I look pre-market, and pre-market I used to trade heavily. I used to be done with trading before open, but now I use it as a planning stage. Sometimes I'll get trades off, but I use it with my inner circle to really plan how the day goes out. So for today, there was nothing. There was absolutely nada. And then at the end of the day, or at the end of pre-market, morning opened, I went live with the team. And at that point, I just picked the basket of stocks that were on my criteria. I look at my watch list, I clean it up. And then usually I'll have one thing on my watch list. And at that point, I will either create a trade plan around it and then stick to it, or I'll just walk away. The best thing for you guys to do is if there's nothing that meets your trade criteria at that point, is to walk away. It's something that took me 6 years to learn, but by sitting at your desk waiting for an opportunity to come, you will find an opportunity. Let's just say that. How many of you guys struggle with boredom trading? Okay, over trading. I met with a student today. I'm really excited because he just signed up for a mastermind program, and I know he's going to do well. Mainly because his hobby is chess, which is literally risk management. I mean, the dude's just going to kill it. But he had boredom trading and over trading written on his arm because he wanted to make sure that he didn't do it. One way to do it is if nothing meets your criteria by 9:30, go enjoy your day. You're going to miss some stuff, but that's okay. You won't miss a lot of the boredom trades you might have taken. The reason for trading is to escape the 9 to 5. If you're sitting at your desk from 9 to 5 looking for an opportunity, you're doing something wrong. Most successful people say 20% of the work equals 80% of the output. No different with trading. Newbie question, but do strategies evolve? The market seems so random. Why is there a strategy that gets updated? Yes, so new things can come into the market, such as the short sale restriction. New rules can come into place. That's changed a lot of my strategies. That was one. A lot of things can change, like stimulus checks, right? Everyone got a stimmy check. Everyone was sent home. People want to learn how to day trade. Great. But because of that new influx in volume, a lot of strategies took a shock, and long trading was really popular. So there's a lot of macro things that can happen that can adjust for a strategy, and that's why that guy I talked about that made 15 million and it's like this, he didn't adjust. Main goal to find a stock that has been 70% up for about a day. It's got to be up at least 70% on that specific day. So you want to remember we talked about last night. We want to look at the analytical and the fundamental backing. And then once those trigger points hit, you go short, define your risk, and you look for your reward. Now, I didn't go over my exit point. Guys, my exit point on this, I feel bad. I close it at 3:45. If it's a profitable trade, I close it at 3:45 p.m. Okay, just before market close. There's a reason for that. I can go on and on and on, but my exit point I will hold all day. Now I will sell some into imbalance candles, meaning big red candles to the downside. I'll take some profit, but if it's just slow grinding, I'll wait all day. Like this, like this, like this. Definitely do not trade in Robinhood. I would never do puts and calls, never do options, never do Robinhood. The first day, Ben, I don't know if you were here, I got everyone on Hammer. It's a broker that I do utilize. I short. So shorting does not mean you have to take a put or a contract. Shorting is you are just borrowing the shares to sell. Don't use Robinhood. What percentage do you aim for when exiting a trade generally? Short trading. So my average loss is a 9% loss. My average gain is around a 20 to a 30% gain. Hey, Vinny, excited to talk to you, bro. Cool, guys. I have Bible study I got to run to. I can take a few more questions, and then I got to dip. See you the 21st. Thank you. How much do you need to add on reentry sizing up? Maybe don't. Um, so you have to be really on it, or is hours flexible? What do you mean by that, Ben? How much do you? Okay, so guys, list your questions now, and everyone I see now, I'm gonna answer, and then I gotta dip because I think I'm supposed to lead Bible study tonight. Oops. So how much do I add on reentry sizing up? So still 3% risk. It should still be the same on my reads or my reentries. It shouldn't deviate if that's what you're asking, or are you talking about like averaging in and out? Thank you, fam. Said a one-on-one call. Pablo, appreciate you, bro. Alex, I definitely look forward to talking to you. Enjoy Bible study. Thanks, man. I appreciate it. How long until I hear from my hammer application? John, when did you submit it that one night, the first night? If you submitted that first night, go and you look in spam, look in your email. It was the one you used to sign up. It is Ace Trade by Valentin. Valentin is a gentleman you should be talking to. It should be Ace Trade or Lyric Securities. And some of them have gone to spam, I believe, just because it's overseas. Um, should be trading with a full time job. I would never ever ever recommend anyone to quit their job to practice trading ever. I am a believer that you need to have outside sources of income before you take trading full time. So for me, I had real estate, which I'm doing. I do a little lease option real estate. I had luckily my wife at the time had a job. I had my real estate going, and then I bought into the construction company and doubled down on that. So at any point in your career, as you size up as a trader, no matter guys, I have 5+ years of profitability under my belt. I still need outside sources of income, whatever that may be. I would highly recommend so you can pay your bills. So no matter what your trading does, it shouldn't affect it. Trading is a long-term game. Turn a little bit into a lot so you can make big investments. So for me, I always keep my account anywhere from 25 to 50,000, and then my personal account. And then once it exceeds 100,000, I pull the cash out and I move it into a long-term investment. I did a big real estate investment on it was a real estate fund that pays me monthly on resorts. As more of a lifestyle play. I can stay at all of them for free. But I mean, if you guys need investment opportunities to help with, I can definitely recommend a lot of things. If you're at like 50,000 mark, but always 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 have outside sources of capital. Doing exits, I do. They are old. I'll be honest. The last time I did an exiting video probably was 4 years ago. I think it's probably adjusted since then. And what I do for that is first price target is 25 to 50%, and then I continue to have. So usually I'm selling or I'm covering minimum two, but maximum of 4 to 5 times. I'm sorry I'm answering these quick, guys. Love your transparency. Hey, appreciate. That's one thing that I'm really I try to bring because unfortunately there's not much of that in today's day and age, especially with my generation. Very embarrassing. Very embarrassing to See, I know a lot of guys who have a who have a supercar, and everyone thinks they're doing great, but I know that they're financing it, and if they don't sell course spots, they're gonna have to get rid of the car. I mean, that's so. Just know, like, I'm not dogging on them, but I'm just saying, like, don't judge someone's success on the car they drive. Judge it on their family. That would be my cool, guys. I really appreciate your time. Thank you so much. I'll put that link again if you want to book a one-on-one call with me or Jimmy. It will not be with anyone but me or Jimmy. I promise you. And if it is, I'll give you $500. I don't know. But it'll be either Jimmy or I. Yeah, Danny, just hit me up whenever. You guys can DM me. You have my Discord. If you don't have my Discord, and if you want to join Bible study too, I will. Put that in here too. There's a lot of epic free value. Don't forget to watch those beginner videos. I only have 3 hours with you, but that's my Discord. Again, we're doing Bible study in there. I gotta jump, guys. If you guys have any questions, hit me up in Discord. I'll answer them. Appreciate you guys' time. I'll talk to you first thing tomorrow morning. Peace, team.